Categories window performs four important functions. The first is a way to group together cost and revenue accounts. The second is to group items together for reporting or inquiry purposes. The third is to establish default tax information to assist when items are added. And the fourth is to define commission structures for salespeople. In the case of the sample data, this database has grouped items by type. Being a furniture distribution company, the sample data contains accessories, desks, chairs, and many others. Looking at accessories, these are the general ledger accounts that have been assigned. Going back to our earlier discussion about segment overrides, here's a good example. Notice that the sales revenue account contains the region segment. The two-character segment at the end now saying 10, whereas the return account does not contain the region segment. Therefore, if an override is defined to say region 20, only the sales revenue and cost of goods sold accounts will be changed because they are the only ones that identify a region segment. The general ledger accounts listed here are fairly straightforward. These accounts relate to the income statement side of a transaction, such as the sales revenue, sales returns, and cost of goods sold accounts. The cost variance account is an expense account which inventory control records the cost difference between the actual cost of an item and the standard cost identified with the item, assuming the standard cost costing method is used. If the standard cost costing method is not used, then no cost variance will ever be posted. However, an account still needs to be entered in order to add the category. The last account is the damaged goods account that order entry will debit when items are returned from customers, and specified as damage so as not to be resold to others. Categories also determine salesperson commissions. If they are allowed, as they are here, indicated by this checkbox, enter a commission percentage. In this case, for accessories, the commission is specified as a flat 10%. This instructs Accpac to calculate a commission of 10% for all salespeople when they sell items assigned this A1 category. This is true regardless of their individual commission rate structure that may exist within order entry. If you want the system to default to the salesperson commission rate structure defined within order entry, then enter a rate of 0 here. A rate other than 0 is a category override from their normal salesperson rate. The taxes page for categories is very useful, in that tax authorities entered here are automatically transferred to new items when they are added using this category. However, tax codes may not need to be entered at all if the tax class codes were established correctly within tax services. Tax authorities on categories only need to be entered if the default tax class code is not accurate for the items being entered using this category. Remember, as discussed within the tax services section within the Financial Management Suite training course, tax class code 1 automatically becomes the default within inventory control, order entry, or purchase orders. Therefore, if tax class code 1 is defined as taxable, and the majority of the items being assigned this category are taxable, there is no reason to individually enter them here. If, however, the majority of items being assigned this category are non-taxable, then tax class code 1 is not correct. Therefore, enter those tax authorities using the appropriate tax class code. Yes, each and every tax code that is not the correct default of 1 needs to be entered. Remember, entering any tax class codes here automatically transfer to any new items assigned this category. Tax settings, though, can be changed on an individual item basis. If it's known that tax class codes need to be entered, then enter them here. Otherwise, they will have to be added for each item individually.
Let's take a look at priceless codes.